So there you have it, guys. We had a loss today. Ooh. The reason I'm actually celebrating is because of the fact that it's a good loss. It's a good loss, and I'm so happy with myself because on a normal day I would revenge trade. I would try and force this trade to work out. And I end up usually blowing the account. So I'm really happy that today that I took my time to, you know, to just breathe, not take that revenge trade, just allow the market to show me the next opportunity. Unfortunately, it did not show me any opportunities, so I didn't take any trades. Yeah, but there's always a next day, and there's always the next trade to look for. So I don't think anyone should be, having that feeling come up, that bad habit. I know it's not easy. Me saying it's not easy to just get over it, but it's something you work step by step, and I believe I'm doing that at the moment for myself because, man, I've blown a lot of accounts too, so I can definitely relate. And I'm really happy for making this journal. I'm gonna get to the video in a sec. Sorry, guys, I'm probably just rambling here, but I'm really happy for making this video for you guys because it gives me the confidence to approach and show you that this, my strategy works. And also it gives me the confidence of knowing that I can help someone out there. And that's really the aim of all this in the end. I really want to help everyone out there that's struggling trading. I want to help every average person out there that looks at trading like a red flag or doesn't like the idea or even the sound of trading. I want to make and show you that this is possible. That's why I'm doing this. So with that being said, let's get into the video. We always have to start with the higher time frame and then work our way down because the market is backed out. Okay. So at the moment we're seeing a break of structure upwards in a bullish trend. And was it Monday or Tuesday and price was around here somewhere? See that prices continue to go down. Like I said, it's going to definitely mitigate that and continue to go to the extreme demand zone, which it has done. That's the 4-hour time frame. We have a bullish trend and we are looking to see price break. What has happened there? I'm not sure what's happened to my screen right now. I don't know what happened right there. But anyways, we have the 4-hour time frame, giving us a bullish trend. Let's go down to the 1-hour time frame just to have a look. Okay, just looking at that, we can see there was a small crypto market shift. Why do I even have that there? Sorry, that's not supposed to be there. Yeah, but we can see like price is falling like massively. The 1-hour time frame is just to give us some understanding of what's really happening within that 4-hour candle. Like I said, I always like to go with the 4-hour time frame, my higher time frame. And now we look at the 15-minute time frame. So I'll explain this in a second. Yeah, but then this was a good opportunity to have entered when I saw price coming back up to the supply. But then I actually wasn't able to execute that trade on time. And price was already around here. So I just left it. Because if I had placed my trade, I'd have had to put my stop loss around here, and that's a very big stop loss. Because 1:2 is somewhere here. That won't work for me. So that's a 15-minute time frame. Definitely a bearish trend. Price is just falling massively. And that's our 15-minute strong. So if you understand market structure, you understand what I mean by 15-minute strong. So it means that this is where if price breaks, we know that this total trend has changed and price is most likely turning bullish. All right. So we'll put a market shift there. That was if this was broken. But at the moment it's not. Let's go down to the 5-minute time frame. Okay, so in the 5-minute time frame, what we see here is as the Asian session closes, you can see that there was a break of structure to the bottom side. And what I was thinking in my head is, okay, I should be selling, not buying. So what I did was I waited for the next internal break of structure, which happened in London Open. And as price was coming back up to my supply zone, I entered for a trade. But unfortunately, there was a fractal market shift towards the up and price was actually coming up here to mitigate all of this because there's so much liquidity around here. There's too many liquidity here. There's liquidity even up here. I was expecting price to come as high as here, but it didn't. Price came up, swept this liquidity, tapped those really retail traders out and continued to go down. I saw this late. After I missed this trade, it was around here when price has already dropped to this point. But if I had seen price come here, I definitely would have taken the trade again. And my reason is because of the fact that in the 15-minute time frame, you would see we have the internal break of structure in the 15-minute time frame, and that was literally a good place to take that trade. So if we did, we would have definitely have gotten, our take profit hit. That did not happen, so let's just forget about that. All right. So yeah, as price broke and took me out there, I protected myself, protected my risk, lost. Also, actually, my trade, I never mentioned the trade risk. So I risk 0.5% for this trade, and even yesterday, my trade yesterday was 0.5%, and that's because I'm in a drawdown at the moment. So when I'm in a drawdown, I like to risk lower, half of what I usually risk, because my normal risk percentage would be 1% per trade. With that being said, yeah, that was how it happened. There was no other opportunities after I saw that one go by, not being able to enter it. I wasn't too confident around here when price came back up here, because that could have literally tapped in here, mitigated this, and continued to go up. So it didn't give me much confirmation. I stayed out, which I'm really happy, man, because honestly, changed so much, and I'm realizing it myself now. Because in the past, I would definitely have tried to trade again and just keep trading, and I'll just end up blowing this account. To be honest, no, not happening again, man. Not happening again. We're gonna take it easy. If we blow this account, let us blow it in a controlled way. Let us follow our plan and know that okay, at least we followed our plan. I don't want story that touches the heart anymore. So with that being said, guys, that's the end of this video. It's just a journal, what can I learn from this? What I can learn from this next time is I think it's just execution on time, because I realized that after price had come up here and tap into the supply, that was a good trade, but like I said, I missed that execution. So I guess it's just having more screen time. But that one is a bit tricky because at the moment I am working as well, so I have to pull up my phone and do a couple of calculations, try and load up my size calculator, my risk position size calculator, and enter a trade, because I'm not going to enter any random lots. You have to make sure you're entering with the right amount of lots you need for the accounts you're trading with. Mine is a 10K account, so we have to risk based on, it's going to be around a 1 lot or 0.7 lot, something like that, 0.5 lots. Yeah, guys. So I'm happy about today. It was a loss, but it was a good loss. We didn't go overboard. We kept it consistent. We kept trading according to our plan. Hopefully we keep doing, not hopefully, we're going to keep doing this onwards. Nothing like hopefully. We're not going to be wishing. We're going to execute right on, plan. Boom, boom, boom. Okay, guys, that's the end of my video. Thank you so much for watching if you stayed to the end, and I'll see you next time.